today. We're gonna touch base on the most common topic today. Uh, Mainly, we'll be talking about smart trading, mastering risk, and strategies. Which is the most common and the most important, part of the sessions. So, in this case, I'm gonna start introducing myself. I'm Marvin, and I hope everyone is joining in because this is the most important and the most crucial, part of the training. So I'm going to touch base right now on the key discussion topics. The first one will be smart trading defined, principles, and modern applications. With regards trading, it's mainly about psychology. It's like any other type of craft, to be precise. So in this case, if you are trading, you need to know your principles, of trading. What is the trading style that you are using? Be it you are a scalper, or you are a swing trader, or maybe you are trading like in real market as hedge funds and all that. We mainly call that institutional style of trading. There's a lot of styles that people are applying, which is hedging and all that. This is institutional, where there's hedge funds, pool funding, and all that. So when it comes to that, there will be the side of the modern, integration of things. In that case, it means if you are trading with modern applications, then you will understand the depth of now integrating your servers to, let's say, for instance, your Meta Gateway, which is the direct server that goes to the market. Why is that? Because it's institutional. So if we're talking about institutional, we're talking on the levels now of hedge funds, institutions that are trading high frequency type of trading style. But in this case, with all of them combined, you need to understand that the principle is something that is leading. It's the key factor that you need within all these different criterias of trading. In all these criterias, you need to understand that, okay, if I am a scalper, what are the key factors? What are the most common, things that I need for me to be able to be successful in this case? So if you are a scalper, you know that mainly you are trading on lower time frames, but in that case, you need to apply your proper risk management. You understand? So in this case, your principles when you are a scalper, it's you knowing that you are trading small sizes, and you are also applying proper risk management. You always have your 1:2, maybe risk versus reward ratio in that case, because as much as you are scalping and maybe you are trading on lower time frames and a lower equity, you need to understand that risk management is very crucial. It's something that you have to apply as procedure specification at all times, because if you are trading without a proper risk management, it means you are exposing your equity into risk. So these are the most important principles that you need to apply. And we had touched base on the modern applications. Modern application would like to say it's modern because now of the evolution of the solutions that we're having now. You get retail traders or institutional traders nowadays, because everything is out there. They get access to requests. They do request specific fixed APIs, to companies to then say, okay, now I want to be trading a certain style of trading. If you don't have access to the modern applications, it limits you to just be like a retail trader. So in that case, you will only be trading scalping or swing trading, but when it comes to things like high frequency trading style, hedging, and all those things, you will have a limit. Why? Because there's certain execution speeds that you need to request for you to be integrated for your trading style, so that you can expose your high equity in that sense. Then we would take a look at things like the second one will be the second pinpoint will be the strategic risk management in the dynamic market. When we talk about uh, the strategic risk management in the dynamic market, we're looking at things like your stop loss. Say for instance, let's say you are trading on the markets. There's options to execute in this case, but if you don't have time, you have different types of market executions. So if you take a look at this platform, this is okay, the MetaTrader 4, which is the previous version from the MetaTrader 5 that we are now using, which is the new generation. Maybe we'll be having other versions that will be coming, based on the evolution of times. But in this case, let's focus on the base, which is commonly what everyone is familiar with. Say, for instance, you are trading in the markets. The smart way to be doing things is to understanding the difference between market execution and pending orders. This is what we call the uh, strategic risk management in dynamic markets. You understand? So in that case, you'll be able to say, okay, the strategic risk management factor in this case, it will be me applying the pending order. If I don't have the time to be sitting in the charts, or if I can't execute, instantly when there's high impact in news events, or when I see an opportunity. So if you have done your proper top-down analysis, or you have predicted the direction in the market, which is what we call a trend, it's easy for you to then say, okay, the type of execution that I'm going to initiate in this case will be a pending order. Then from the pending orders, you've got different types, which is buy limits, sell limits, buy stop, and a sell stop. You understand? So this is you now taking an advantage of the platform to then say, okay, instead of me sitting there trading all the time, looking at the charts, waiting for an opportunity to come, I can literally just identify a certain price in the market. Like for now, we are looking at gold. You understand? So in that case, we're looking at our current price, and maybe let's say, for instance, we are anticipating the market to be trading at a certain price. Let's take, for instance, this price, right? So in that case, or let's take for instance our average daily reversal high, which is 3,660.77. So if the market is reaching 3,660.77, you are anticipating a possible sale. So in that case, what you're gonna do is you can literally just come here. Instead of market execution, you can literally select the pending order. Then it will give you a variety of different types of executions. So in that case, you can literally say, okay, I want to set a sell limit, right? So how do you set the sell limit? You look at the price that we had anticipated. We had anticipated that probably, if let's say for instance the price reaches the average daily reversal high of 3,660 dollars per ounce, it means we are looking for a reversal. So in that case, you will be setting your sell limit at that price. That saves you time to be literally sitting on the charts waiting for the price to reach that level, because psychologically, so if you're literally sitting on the charts waiting for the price, this is the market. It will literally induce you psychologically and trigger you to take decisions that are unplanned. And in that case, it means now you are out of the box. You are no longer applying risk management, because you are trading and scalping in when the market is ranging, but according to the volatility in the market, if you are waiting for the market to reach a certain level, it means now you are applying discipline, proper principles, and a proper risk management factor. So with the sell limit, you can literally separate yourself from emotions. You just put your sell limit at let's say 3,660 per ounce, right? 0.77. I just want to show you something. So in that case, the expiry date of the pending order is stated here. What is the date today? Today it's 11. You can literally change it according to how you want. If you want it to expire maybe on the 12th, you can literally do that. Maybe, for instance, the market that it doesn't reach that level today, you can adjust it, to the 12th. That is taking advantage of the tools that we're having on the platform, and understanding the combination between technical analysis and the risk factor, and the technology that is being implemented within. Then you can simply just place, and your order is placed exactly at the predicted price that you are looking to set your pending limit, right? As simple as that. So that is you taking an advantage of the strategic risk management in the dynamic market, right? Then we're gonna move to the third point, which is technical versus fundamental analysis, right? Choosing the right approach. So, what is the right approach? So, the right approach will basically be you doing your top down analysis and understanding the trend in the market and the direction of the market, right? But you have to be combining the fundamental analysis with choosing the right approach. What is the right approach? The right approach is starting with the base, which is doing your top down analysis, which is technical analysis, doing things in a proper way, studying the market from the higher time frame till your lower time frame. Now you know the direction in the market, you understand what is the trend in the market, then you will move to the fundamental. What is the fundamental? The fundamental is the high impact news events that are taking place on a daily basis. You understand? We've got your FOMC, your NFP. This is fundamental. So now, with your technical analysis, combining it with the fundamental, what happens is that you will then know that the direction of the market today, let's say it's bullish, right? The market is moving to an upwards momentum. But now, what is going to move the market to, uh, to a certain direction? What moves the market to a certain direction is the fundamentals. So now, when you have done your technical analysis in a proper way, you then know that, okay, we are anticipating, according to our technical analysis, for the market to be moving to an upwards direction. So in that case, you know that there's a high probability of your news or the fundamentals to be leading or pushing your market to an anticipated direction. You understand? So that's where you choose the right approach when you are trading, combining the technical analysis versus the fundamental analysis. Where do you get the fundamental analysis, which is the questions that I will be expecting you guys to be asking me at a later stage when we have the question and the answer. But to cut things short, because we are already on the face, I will explain to you so that you understand and so that everything makes total sense. So in this case, your fundamental analysis, you can get them on investing.com, Forex Factory. These are the common used fundamental high impact news events websites that people are using at all times. So in that case, you will get your high impact news events released at all times, and you will be familiar with them. So all the time, normalize uh, doing your technical analysis. When you are aware of the direction in the market, you can then combine the fundamental release with your technical. So that will help you at all times to be able to choose the right approach when you're trading using the technical versus the fundamental analysis. I hope everything is clear, because this is the information that you need to be digesting, because it will help you with your journey to apply proper risk management within the markets, and it will help you to become a very responsible and a very good trader within the markets. And the most important thing is to constantly learn, revisit your charts, understand what is the meaning of the high impact news events, because sometimes you get that there's high impact news events that occur. Say for instance, NFP, it happens each and every first Friday of the month, but common mistakes that we face, from most of our clients is that we don't want to understand the depth of the meaning of NFP. Like NFP, it's non-farm payroll. You understand? So in that case, we are looking at the payrolls, employments and all that. So in that case, you need to be learning and understanding the meaning of all these releases, so that when you are watching news, you know what affects the market, what affects the GDP, what affects the FOMC, all those things. You need to understand what you do at all times. This is another factor that we need to normalize, as traders, to say, okay, I hear people are saying NFP this, NFP that, but what is this NFP? Do you even take your time research? Because if you understand what is NFP, it means you can literally just watch your news, your financial news, and understand the release, and you understand what is the meaning of these things. It's the simple as the price in the market when you're trading gold. Some people will be saying, no, gold is trading as at 3,500 or 3,600, but you don't know what is this 3,000. It's just a number in the charts. What is the meaning of it? You need to understand things in depth, and by so doing, it means you have to constantly revisit your charts, you constantly have to study, and you constantly have to understand what it means, when they say it's 3,000. So it means it's the value of the gold in the current market. It's $3,500 per ounce. It means that's what gold costs. So always normalize understanding things when you do them. This will help you in the future to apply proper risk management, because you know exactly what you are doing. So choose the right approach, which is something that is very important. So now we're going to focus on technology integration in trading decisions, right? So when we talk about the technology integration, we are talking about a lot of things, which is something that you cannot finish in one day, because there's connections of a lot of things when you are trading, more especially in the digital space. Now that we're having AI, which is artificial intelligence, there's a lot of things that are happening. We've got algo trading, we've got this, we've got that. When you look at the evolution of trading from Wall Street, remember that prices were given with receipts before. We were like literally writing the price on the paper, and you can literally predict to say, okay, this is my trade, and you put it on the table and it gets received, and things were happening manually. But now there's gateways, there's meta gateways, and there's different types of servers. There's a lot of integration, which is something that is common in the industry of operations. Most of the traders, they don't get access to these types of things, but mainly this is commonly normal to the back end, which is the operations. But most of the people now are getting access to this information. That is why you get the evolution of trading now is on the level of institution. Why? Because there's people that are literally setting up companies. Remember, you start as a simple trader. From a simple trader, you evolve now to become an IB. Then from an IB, then you will start maybe your trading floor. From your trading floor, then now we categorize you as a what do we call that? We categorize you as a institutional trader. You understand? So from a retail trader to an affiliate, or maybe let's say IB, then you move from IB you to now institutional trading. That's where now the technology integration in trading is required. You understand? So you need to take decisions based on the integrations that are being implemented in the market to make it easy for you. If you can take a look at this chart, now I'm going to give you like a typical example. If you can take a look at this chart, it has a lot of technology plugged in. So we have plugins that are commonly used to be connected with the MetaTrader 4 and 5 platform. Say, for instance, now if I'm looking to have an identification of the peak formations, I can literally just come and choose like one relevant indicator that is in line with that, right? So a relevant indicator that is in line with that is the peak formations. You see that. So that is what we call the technology integration in trading decisions. So now I'm identifying, I'm taking a decision to have my peak formations, so that I can know what is the previous high and the previous low in the market. This is very good, you understand? And you see like the reversals in the market, there's peaks that are there, you understand? For instance, now let's say for instance I want to check things like the trading time and all that is something that can simply be integrated within the charts used by using technology. You know, we can do that at all times. We are in a new evolution now, and it's easy to be trading. It's unlike before, right? So when you are trading using the technology integration in trading decision, this is one of the key factors that will help you to become a smooth trader. And taking advantage of this technology integrations, it's one of the most important things, because it will make it easy for you to be a profitable or scalable or professional trader, you know, in whichever way you want to call it. So there's a lot of examples I can do, you know, that will make you, but trust me, this is very broad. You know, there's a lot of things within this space that we can literally touch on that are related to the technology integration in trading decisions. You understand? Something very important. Don't take it for granted. So now number 5, we are touching now on the trader psychology and behavioral risk factors. This is very important. Now, this is where we are talking about now FOMO, things like FOMO. FOMO is the fear of missing out. Or there's another one that is over trading. You know, you get that sometimes you are over trading, but you are not applying proper risk management. You are not applying top-down analysis. You are not checking your fundamentals. You are just getting in the market and you are trading based on emotions. So for you to be able to control your emotions, you need to understand the trader psychology and behavioral risk factors. That if I'm over trading, if I'm having FOMO, which is the fear of missing out, it means now I'm going to enter on the market with FOMO, and I would end up entering in the market at the price that I'm not supposed to be executing at. If the market is ranging and now psychologically you are moved by the fear of missing out to execute in the market. It means you are getting in the market based on the emotions, and you are not psychologically prepared to know that, okay, I'm following the trend, I've done my top down analysis, I know that there's no high impact news events that are going to occupy at any given time, so I don't have to be in the markets, I don't have to be trading. So this is something that you need to train yourself at all times when you are trading, because if you are affected psychologically and emotionally, it means you're gonna take uncalculated risk decisions, and that will most probably lead you into losses at all times, but luckily some of the people, you get that they become lucky, the market will go to their direction and they end up in the profitable side, but that will not happen at all times. So it's always important to be protecting yourself when you are trading, and apply the trader psychology and behavioral risk factors, which is dealing with your emotions at all times. I normally see, like, professional traders, what they do at all times, you get that someone is meditating before they get to their charts, or maybe they're doing yoga before they get to their charts, or maybe they set up certain music before they get to their charts. This is preparing you not to be affected psychologically, and not to be affected also with emotions. So in that case, you need to apply your trader psychology and behavioral risk factor, which is something that is in line with understanding what you are doing. What we normally do is that we would before have like an Excel sheet that will give you percentages, because now if you're trading based on the statistics, you know that, okay, I'm trading based on the statistics, and I'm only looking to be making 10% of what I am doing in a day. So let's say, for instance, you have an initial of $100,000, you only want to make 10% a day. But in that case, it has to be a combination of having a trading plan, understanding that you're doing a certain percentage in a day, and also applying your top down analysis and your fundamental analysis at all times. So in this case, this will help you not to be affected psychologically. What affects you psychologically is constantly looking at the charts, seeing the charts moving up and down. Sometimes there's high impact news events, you see the noise everywhere on social media, and the market data also is giving you a lot of noise. The candlesticks are giving you a lot of noise, and you are being induced to feel that you're missing an opportunity. Why am I not trading? Because the market is moving. Why am I not in the charts? Why am I not having open positions? Because I see a lot of candlesticks are moving. No, if you're having a trading plan, and you know exactly that you are only trading 10% in a day, you will wait for opportunities to come, and you will follow your strategies at all times. So have a strategy that you're using at all times, so that you don't overtrade, or you don't get induced by this psychological aspects that we have touched on right now. A typical example will be your fear of of missing out, or the over trading. So in that case, trader psychology and behavioral risk factors are very important to apply when you are trading at all times. Trust me, this is very important. So um, building a scalable and resilient trading strategy. All right, what do you need for you to be able to build that? There's a lot of key factors that you need to focus on for you to be able to build that. Why? Because now you need a skill. You need to understand the depth of the market. You need to understand your top down analysis. You need to understand, now we're talking about back testing. You need to understand coding, because now to build a strategy is something very big. You need to look at the data from years and years and years and years. And now within the platforms, there's tools that you can use, the algorithm side. You need to open that to be able to back test and use this tool so that you can build your strategy. It's a lot of things that you need to apply. You need to understand Fibonacci calculations. You need to understand brilliant reversals. There's a golden ratio that is used to build these strategies. So this golden ratio is mainly, it's a specific number. So it's 1.6180. Exactly that number, 1.6180. This is the number that is used to calculate the moves within the market. This is the number that is used to build the Fibonacci. You understand? This is the number that is used to build literally everything in the world. You understand? So mostly the algorithm strategy builders and the strategy creators, they are using this golden ratio to create. But there's other things that you can use to back test. But mainly, I remember the beat the market makers method. It was created with the golden ratio number. So building your strategy is one of the key factors, which is something that is very important. But you need the depth of understanding. You need to understand the candlestick patterns. You need to understand, why do you have to build a strategy? The most important thing for you to be able to stick on one strategy, it's because you want to focus on proper risk management. So if you don't have a strategy, you can't apply proper risk, because you don't know what you are doing. You're just going up and down with the charts, just going up and down with the trends, which is something that will expose you to risk in no time if you don't know what you're doing. So in this case, for you to be able to be building a scalable and resilient trading strategy, you need to study in the market. You need to learn trading. Let me tell you something. With trading, education is the most important thing. You need to educate yourself in trading, then anything else will follow. If you can focus on educating yourself with these key factors, you will be able to understand trading. What is happening in the charts? Okay, it's there. And now we have tools that we are using, like a auto chartist. If you're someone that doesn't have time to be literally studying everything, you can literally go to a auto chartist and get the signals from there, right? Like now, if you take a look at auto chartist, is giving you signals on a daily basis. So if you're gonna be profitable using auto chartist, okay, it doesn't matter if you are focusing on the depth education of trading or not, because literally you're literally coming here, and you can see that in forex, these are the signals that we're having a day. So if your asset class is, let's say, forex, or maybe let's say, for instance, you're trading USD JPY, this is the signal for the day. You understand? So you can literally just, if you can take a look at this, it was issued out 36 minutes ago, right? It has the entry level, it has the stop loss, it has target one, it has target two. And with the tools that I've showed you when we were starting the session, you can literally use trailing stops. You can literally use pending orders. You can literally take an advantage of the technology that has been implemented on the charts for you to be able to trade like a star, for you to be able to trade like a pro. Because if you're getting a signal like this and you're not on the charts, or maybe the price is not trading at that level, you know that, okay, if the entry level is at $147, you don't have to wait for the market to get to that level. You can literally just set a pending order, right? What is the trade saying? It's saying you are selling, right? It's going down. It's a bearish trade. So in this case, you're waiting for the market to drop to 147, right? And then you'll have your stop loss right above 147.60. This is a trade. This is a money making machine. You understand? So you need to be taking advantage of these things. And how do you take advantage of this technology in the markets that we are giving you? Your manager is your friend. If you are a retail trader and you have a manager that is assigned to you, uh, mainly when you open the website, you see the name that of the manager that is assigned to you. That is the person that is assigned to assist you with all these things. The webinars that we're doing these webinars for you guys to get all this information, because sometimes you don't have time. You are coming from work, you're tired, you don't know what is auto chart is. You don't know how to operate it. You don't know how to switch from different asset classes. Like now, if you can take a look at it, we've got Forex, we've got cryptos, Bitcoin, Signal is issued out, we've got stocks, you understand? Literally there's Ford, there's Visa, there's Amazon, everything is literally there. The signals are issued out. Imagine if you could get an opportunity to pick all these asset classes that have been put there, commodities, indices, and you'll be able to use the pending limits or the pending orders, because you can't literally be sitting at the charts waiting for the price to get to a certain level. So if you can get an opportunity to set pending orders for all these asset classes or all the signals, imagine, probably, say for instance, because the returns when we're looking at it is like 90% most of the time, they're accurate. So if you can execute pending orders on all of them and you just close, you will be profitable. It's an easy way to make money, taking advantage of the auto charts. If you want to build a portfolio within the palm investments, there's things you need to explore. You need to explore when you open your TNFX dashboard. You need to explore, check what is palm, right? What is auto charts? These are the things that are there. What is a VPS? There's literally a Forex virtual private server that is there. But now you get that you don't know what is a virtual private server. What is it used for? You understand? These are the things you need to educate yourself. And like I said before, your manager is your friend. If you're having a manager that is assigned to your account, these are the questions you need to be bombarding them with. You need to bombard them with questions of the things you don't understand on the platform. This will help you to grow. This will give you comfortability within the trading space. You know that, okay, I'm trading with TNFX and I understand literally what is everything there. You will be comfortable, and trust me, you will have a progressive trading journey, because now you know what you're doing. You've got variety of trading methods, of options. You can literally choose to say, okay, I just want to focus on my strategies, so I'm going to be joining the webinars weekly so that I can understand when they're doing top-down analysis, how I can do, maybe let's say for instance, we're focusing on smart money concept, or inner cycle trading, or scalping strategies, or swing strategies, or institutional hedging strategies. You may call them all of them, it's a diversity of them. But for you to be able to understand all those things, you need to understand what is happening. Create options for yourself. Like now, if you are looking at the palm investment, this is percentage allocation management module. So in this case, it simply means that you can literally just come here, check the statistics of the account managers that are here and trading. You see this one is doing good, this one is doing good, this one is doing good. A lot of them are doing good there. So in that case, you need to communicate with your manager and tell him that, you know what, hey, I saw something here on percentage allocation management module, and I can see the traders, and I can see the absolute gains, the returns and profit and everything. The rating points are there, the total funds. How do I get into it? How do I then invest into the percentage allocation management module investments? In that case, you are learning, and your knowledge within the Forex space, grows, and you know what you're doing. What is the private server? I can see the private, the Forex VPS. What is it used for? It's a private server that you can rent. If you have a copy trading system and you're still using the old methods of copy trading where you manually put the accounts one by one, obviously you need a VPS for you to be running your copy trading. Okay, now we've got multiple account management that system that we have integrated, which is available for everyone, and the percentage allocation management module. But with the VPS, if you still want to do your things in a classic way, where you can literally connect one account, with the Meta 4 and 5 platforms, you can literally rent the VPS from us. Partners portal. What is partners portal? These are the things you have to ask. You understand? What is the partner portal? The partner portal is where now you move to becoming an affiliate. If, let's say, for instance, you are a trader for a very long time and you've got friends that are trading with you and you feel like, now I think I'm ready to mentor all these people. I want to create a Telegram channel. I want to have my education on YouTube. You can literally call your manager or send him a message and be like, okay, I can see this partners portal here. What is this thing? How can I get into it? What are the requirements you need to know so that you can prepare yourself? This is the basic education that you apply as a trader to say, I want to grow, I want to take this as a career. And trust me, at TNFX, we cover all these things and we make sure that this is the purpose for us to be creating these webinars, to make sure that our clients are growing with education and they understand exactly what they're doing. And all these things that you see on our portal, they are very important. So you need to make sure that you're checking them at all times so that you can evolve with time, because our websites, our portals, our dashboards, our copy trading systems, they are evolving with time. We keep on updating them. So you need to be also checking what is happening. Economic calendar is there. If you don't want to be checking your Forex factory, if you don't want to be checking investing.com, you can literally just come here. You have, like, literally you have your whole office. Once you open the dashboard, everything is there. You want to open an account, you want to deposit, you want to withdraw, you want to do internal transfers, you want to check your transactions, you want to request for bonuses. Anything is there. So you don't need anything else. The only thing you have to do is to keep on educating yourself at all times. Like I said, today we're focusing mainly on risk management and psychological aspects. We didn't touch a lot on the technicality of trading. We didn't do your top-down analysis and all those things. The main thing was just to touch on motivating people with growing their knowledge within the market, making sure that they apply proper risk management at all times, and making sure that your account manager is your friend, because these are the people that are trained professionals that understand all the tools that we're having on the platform. And if your manager is your friend, everything will flow smooth and easy for you. Talking withdrawals, deposits, everything that you need to understand within the market, palm accounts, anything. If you are on an institutional level of trading and you want to be getting fixed APIs and all those things, base principle, your manager is your friend. So I'm going to close it shortly, but firstly I'm going to check if we do have questions and answers, so that we can take them before we can close the session. Do you have questions? Thank you so much. I can see that everyone is appreciating the good work that we're doing, and I feel like everything that we have been discussing and speaking about is clear, because I was trying to explain everything step by step so that there's no confusion. Mainly we're having questions if there's confusion, or maybe people do not understand what we had spoken about. But in this case, I believe everyone has understood. And do like, subscribe, share with your friends, because this is informative information that will help you to become a professional and a profitable trader. Remember, basic principle, which is the quote of the day today: Your manager is your account manager is your friend. If you need any information, contact them, send them messages, ask them as many questions as possible, because trust me, these people are assigned to you and they have all the answers you need, and they are professionals. So in this case, we're just gonna close it short because we haven't got questions. Let's call it a session. Okay, we have one question from Ahmed. Let's go. Let's take the question. I believe this will be the only question that we're having. Then we can close. Let's go. Okay, good. The question says, can I enter with a small amount of money? Okay, with that palm and mom. I love this question. This is a very beautiful question that I'm gonna uh, give you a smooth answer on. Look, if you are trading and you have a small amount of money, it's okay. Sometimes you get that the small amount of money is the only money that you are having. But you need to be having realistic expectations. Trading doesn't limit anyone to say, okay, it doesn't have a specific criteria where we say, if you don't have 50,000, you can't trade. Or if you don't have 10,000, you can't trade. No. Trading opens an opportunity for anyone, anywhere to trade at any time. Right? But as a person, you need to have realistic expectations. If you want to build a house, or if you want to buy a car, or if you want to buy a phone, these are three different types of goals, right? Remember, when you are trading, the most important thing is to live a purpose-driven life. To know that I'm starting to trade because I need to achieve this. So if you're buying a car, building a house, and buying a phone, these are three different types of goals. So now, in that case, your account will determine your goal. If you want to buy a phone, okay, you can start with $100. You know that if I'm starting with $100 and I'm applying the 10% rule, in a space of 2 to 3 months, I can be able to buy a phone. But if you want to build a house, you can't be starting with a small account. So now, your account equity or balance will depend on your goal. I think I've answered your question there. So in that case, with the palm and mom account, you can literally start with any amount you want to start with, depending on the account manager. Some of them, they've got different criteria. Some of them, they've got a limited, base entry, to say, "Oh, I'm only allowing people to start with 1,000." Some of them, they'll say, okay, you can only start with 500. Some of them, okay, you can start with 10,000. So it all depends on you, and the goals. But with the palm and the mom, mostly it will depend on the account manager, the account holder or the palm holder, to say, I want people to start with 1,000 under my subscription, or some will say, I want people to start with 500 under my subscription. So I hope I answered your question. And yep, let's wrap up. I think we're gonna close now. Thank you so much. And I'm glad that everything is clear. And if you have any questions, remember to contact your manager, which is the account manager that is assigned to you. They will help you with all the questions. And do visit this webinar again. Watch it, so that if you're having a confusion and you want to ask the questions, you can literally ask your manager the questions. They have all the answers. And attend all the webinars on weekly basis. Every Thursday, we are having a webinar. Do attend them so that you can get information and a lot of depth in education about Forex trading.